Hey everyone, welcome to another episode of ADMAIL. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of ADMAIL. Got a really good episode for you today. I think you guys are really going to enjoy it. 3 superb questions. One about using IRA money for a down payment on a home. Second one about minimum cash balance for opening a self-directed IRA. And the third about investing in an S Corp with an IRA. So really excited about today's episode. Thanks to everyone who's submitted questions. You can do so anytime you want by just leaving a comment on our YouTube channel or anywhere you're watching or listening to these videos. You can also email us at info@IRA Financial and just say Ask Adam or ADMAIL or Question for Adam, whatever you want. It'll get to me, I promise. Got a really good set of questions in queue, but always can use more, right? We all can learn from each other. That's why I love this podcast. So let's start. Question 1 from Julian T. of Kalamazoo, Michigan. Julian wants to know, I need $50,000 for a down payment for a home. Can I use my IRA? So Julian, gonna be tough, right? Unfortunately, under Internal Revenue Code section 4975, you can't use your IRA in any way in transaction to directly or indirectly personally benefit you. So using your IRA money as a down payment for a home you're going to live in, it's not going to work, my friend. Unfortunately, can't do it. What are some options, though? Well, if you have a 401k, either a solo 401k or an employer 401k, you may want to look into a loan, right? You can borrow $50,000 or 50% of your account value, whatever's less. Use that for any purpose. So if you have 100K in your employer plan, you can borrow 50, and then there's your down payment. Yeah, it's an interest rate. The rate is a lot higher now. It's 7.5%, which is prime. Used to be, during COVID, it was 3.25%. So it's a little more expensive to borrow money, but Julian, the money goes back to you, right? You're paying the interest back to your plan, not a bank. What else can you do? You can always, if you have an IRA, you can take a distribution, but if you're under 59.5, you're going to pay tax and a 10% penalty. If it's a Roth, you can always pull out the contributions tax-free, but the earnings, the income gains generated from the contribution would be subject to tax and a 10% penalty if you're under the age of 59.5. There is a hardship of up to 10K for a first-time home buyer where you can take up to $10,000 for an IRA to buy a home, but it's for your first home and it's only 10K. So I think those are probably your best options. I would not use a self-directed IRA as a down payment for a home you're going to live in. That's a no-no. You're going to violate the IRS prohibited transaction rule. So I definitely would suggest not doing that. But it's a good question. I get that question quite often. So it's really good. Second question is from Facebook. And this person wants to know, do you have a minimum cash amount to open and maintain a self-directed IRA with you? Great question. Actually, no. IRA Financial has no minimum amount. So that's why you can open an account. It's a $400 flat fee. You don't have to keep any money in our account. You don't want it. Keep a credit card on file. This way you can pay for our annual fee. It's paid quarterly after year 1, so $100 every quarter. Not horrible. We do all the IRS administration, 5498s, 1099. We also provide tax filing services and tax advisory services. So all that is available if you're a client of IRA Financial, but you don't have to keep any money in your account. So if you need to use every last cent to make your investment, we don't require you to have a minimum balance. You can just keep a credit card on file and you're good to go. A lot of other businesses, IRA companies in the space do require 500, 5,000, 2,000. We don't. It's your money. If you don't want to leave anything in the account, you don't have to. So it's a great question. I think it's one of the things that differentiate IRA Financial. We also don't have any wire fees. We also don't have any transaction fees. We also don't have any asset valuation fees. So as your IRA goes up in value, you pay the same flat fee. So we're super excited about that, especially for investments. If you're doing cryptos or digital NFTs, digital assets, fractional real estate, crowdfunding, a lot of times they're smaller type investments under 50K. So you don't have to leave any money with us if you don't want to. So I think that's pretty cool. Third and final question of today's episode is from Chris A. of Tacoma, Washington. Chris wants to know, I have an opportunity to invest in my friend's S corporation. Are there any rules I need to be aware of? So yeah, there are. I actually did an ad bits on S corps and IRA. So all in all, an IRA cannot invest in an S corp. Why? It's not an Internal Revenue Code section 4975 or 408 issue. It's a section 1361 shareholder requirement rule. S corps have very wonky shareholder rules. For example, only individuals, certain trusts and estates, single member LLCs can, 401ks can, foreigners cannot, IRAs cannot, corporations cannot, multiple member LLCs cannot, partnerships cannot be shareholders of S corp. So if your IRA invests in an S corp, what would happen? You wouldn't trigger a prohibited transaction rule, Chris, but the company would blow its S election, and then the company would revert back to a C corp, which your other partners or shareholders probably wouldn't be super excited about, because what's an S corp? An S corp gives you limited liability protection like a C corp, but it has one level of tax at the shareholder level. So it's pass-through taxation, much like an LLC. S corps and LLC are very much alike. C corporation, on the other hand, has two layers of tax, meaning a corporate level of 21% and a shareholder level, generally ordinary income or capital gains, depending on the type of qualified dividend. So that's two layers of tax. S corps, LLC, one layer of tax. So you can see why lots of businesses want to be an S corp, and really since the 90s, LLCs have emerged as a more popular option than S corps. Why? No shareholder restrictions, as I mentioned. Anyone can be a member of an LLC. There's no shareholder limitations, whereas an S corp is 100 shareholders. LLCs can have unlimited. S corps also have one class of stock requirements. You can't have multiple classes. LLCs, you have more flexibility. Plus, an S corp is a corporation, so that means there is corporate formalities, board meetings, minutes, all that good stuff. LLCs have nothing. It's super flexible. You don't have to have board meetings if you don't want to. No minutes, agendas, all that stuff. So less corporate formality, kind of easier to operate. And really, that's why it's taken over from the S corp as the most popular type of small business vehicle. Unfortunately, IRAs can't invest in S corps, but you can invest in LLC. So it's not an S corp issue is not as big as it was 25 years ago. 25, 30 years ago, from what I understand, I was not in the self-directed IRA space. I only been practicing law since 2001. So, probably in the 80s, 90s, you saw lots of IRAs wanting to be S corp shareholders, because most small startups, exciting businesses were S corps. Now they're either LLC or C corps. S corps are still popular, right? Because there is limited liability protection. It's pass-through taxation. But another advantage is you can always take a very small W-2, so you pay low Social Security taxes, and then take the rest as a distribution. You just got to be super careful that your S corp salary is not too low, because the IRS does watch this, because they want to make sure people are paying their fair share of Social Security and not kind of taking everything out as an S corp distribution, circumventing that tax. So you can work with your accountant or tax advisor on that. But in a nutshell, that's kind of it, Chris. So Julian, the person from Facebook, Chris, really appreciate the questions. Really good stuff. I just really want to thank everyone who submitted questions. It's a great way to learn. I mean, I love preparing for the podcast. There's questions out there that I'm just like, whoa, I haven't looked at that issue in, a year, 5 years, whatever it is, and kind of gets me back into it. So I don't know if you can ask, any good lawyer will tell you, it's hard to be a generalist, right? And I'm very specific into self-directed 401k taxation. But there are subjects that pop up that I just don't see a lot. So this podcast kind of keeps me sharp. I love it. So it's fun. So please keep the questions coming. You don't have to be a client of IRA Financial. Anyone could submit a question. I don't care. As you know, I don't share anyone's name or addresses or email. Just want to keep it, super chill, private, so people feel comfortable to submit questions. So thanks for listening. If you're watching on YouTube, obviously appreciate it. You probably a subscriber, so you're smart. If you haven't subscribed, do it. It's free. Like, what are you waiting for? Otherwise, it's a weekly podcast that drops every Thursday. If you miss it, don't worry. You can pick it up anywhere you listen to your podcasts, or you can just check it out on YouTube if you wish. So thanks again for spending some time with me today. Really cool episode, and have an amazing day. Take care.